Hello and welcome back, everyone. It's another week, and we are generating some more income with the continuous wheel strategy. And we have a cash secured put transaction to track, so let's get to it. So here we are logged into the Ameritrade paper trading account using Thinkorswim, and we're looking at the chart Marvell because that's the stock we're dealing with the continuous wheel strategy for this demo in the videos. And as you can see, this past Friday, it already was in the red, and today was no different. It continued the downtrend, and we had set a put, and it came right through that put and executed the trade. So let's go over to the monitor tab so I can show you that. And as you can see, yesterday we placed an order in queue for Marvell. We placed a put for a 46.50 strike, and let's see, today it was at 45.03. So yeah, it went down $1.50 through the strike. But in any case, it doesn't expire till this Friday, so we'll see how that plays out. But we had put a limit order in for $1.20, and when it actually filled, we actually got filled at $1.65. So we got quite a bit more than we were expecting for the premium. So that's actually pretty awesome. All right, so let's go over to the activity and positions. And yeah, we can see that that's in there. It's in the money currently. It has 4 days left. All right. The funny thing about it is, the fact that it went from 46.50, or it was actually a little bit above that, but it dropped down, $1.50, would probably freak out a lot of people, make them really concerned that they had made a really bad decision. Um, you know, Stocks go up and down. Really, the whole key to this thing is choosing a stock that you are confident in the fundamentals of it. I mean, you could be a technical analysis trader or you can be a fundamental investor, and I am doing this purely for the cash flow reasons of it, and stocks are going to go up and stocks are going to go down, and we just ride the wave up and down and collect as much cash flow as we can while it's doing that. It's just a vehicle to collect cash flow. At least that's the way I look at it. Now, I do also focus on dividend paying stocks, and this is a dividend paying stock. The primary reason why I do that is because the more a stock goes down in value, the higher the dividend yield goes up. Now, the only real big concern is if the stock is going down because of some reason, like the company's going out of business or it's headed for bad times. That's the only time to really be concerned. And you can see the past earnings here. When we chose this stock, the earnings were doing really good. They're always above what they were expecting. So generally speaking, this company looks like it's pretty sound. I haven't done in-depth research, but just generally looking at the dividends, looking at the earnings, the trading history for the chart, it's stable enough for me to run a continuous wheel strategy on it. So coming back to the monitor, all right, so $1.65. So what we need to do next is we need to go and track this transaction in the web application. All right, so here we are on the myatmm.com, and when you first log in, it takes you to the dashboard page, and you can see Marvell is in here. And this position in Apple was just a test. It's not an actual position I have in any demo account or any real account for that matter. And I'm going to go ahead and use this moment just to go clean that up real quick. And so in here we can go ahead and just delete that transaction so it won't show up anymore. So here on the dashboard, you can see it's been removed, so it's no longer active. The collateral is no longer reflected. All right, so here we are. We're going to go focus on Marvell. We need to come over to the cost basis to track this transaction. Click on Marvell because that's the stock we're dealing with. As you can see, there's no positions in play right now. We're going to go ahead and create a new position. We're going to sell to open, and it is a put. We're doing one contract, and it's expiring this Friday on the 10th. The strike, I believe, is 46.50, and give me a second. Okay, so here we are. The strike, yes, is 46.50, And the price we got for that, we had put it in at like $1.20, but we ended up getting $1.65 because the price went down. So we actually got $45 more than we were expecting. So that's more money, obviously, is always nice. So we click save. That comes into the puts grouping, and it created this proposed transaction. So we need to add that to the permanent transaction history down here. Instead of typing it in, we just click the helper button. And this is a demo account, so we're not running any fees, but the fee would have been 65 cents for each option contract. That's what Thinkers from Ameritrade charges, plus I think a regulatory fee. So in any case, so that's that deal, and we need to click save to retain that. And now it's moved down in here, and we can come check out the summary up top, because right now we just have a put position. We've been in and out of this stock a couple times. If you go back to the past videos, you can see that. And so yeah, now we're setting pretty nice. We've collected over $809 in premium on this one stock alone, and we've only been trading and dealing with this in this demo account since this January. So just a little over a month, and we're already up $809 on this stock. Now, you know, it may expire in the money this Friday, because as you can see, the price is $45 right now, and our strike is $46.50. So if it stays around $45, we'll definitely be buying it at $46.50, and then we'll be down about $150-ish. But you know, down 150, and we're already up 809. Not to mention, I like it when we finally do get into the stock, because then that means we will be playing both sides. I'll be placing put orders as well as call orders at our cost basis, which our cost basis, if this was to execute this Friday, our cost basis would be $46.50. And now that's not considering with premium. If in fact it happens this Friday, you'll actually see what the cost basis with premium will be. If we actually purchase this, it'll be the $46.50 or $4,650 minus the 809, then divide that by the 100, and then you'd actually get the cost basis with premium. But you know, we're in this for cash flow, so I always focus on the strike prices of cost, where the cost basis is set for the call strike price, and then the put strike price, I just always put that at the money so I can collect the most premium for it. And that's what we run during the continuous wheel strategy that we run. So let's come back over to the dashboard, and there's really not a reason to look at the premiums broke down, but I'm going to. We saw the overall $809, but what that's broken out to is in January we did $494, and so far here in February we've collected $315. So is that right? $315? Let's go back and look at that. I mean, it must be right. Let's see what that was from. So we have the put. Yeah, so that put expired, so that's where that came from. The funny thing about it is I think that expired in February, but I believe the trade was actually placed it was probably placed February 1st, so yeah, it does qualify as this month. So in any case, yeah, doing pretty nicely just off this one stock. And I mean, if you can just imagine and extrapolate, if you had scaled that and done like 10 contracts, you know, that would have been $4,900 and $3,000 instead if you were doing 10 contracts at a time. So anyway, this one's doing pretty nice, and we'll see how it does this week and see if it expires worthless or if it expires in the money, and we will go from there. I want to thank you for watching. Like and subscribe if you haven't already, and go out today and get your free account at myatmm.com. Thanks, and I'll see you in the next one.